Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. As I zoom in here, you'll see that I left my lines on the chart from last week, where I drew this diagonal line in an upward direction, saying that we would most likely break out of the high from back here in mid-March. And the end of that line right there at 334.86 was my target. Now, we hit that early in the week, and now that we are over that resistance, it's important for you to understand that former resistance right here, once broken, as we saw this week, turns into support. And so this new support level is more or less matching with the 20-period moving average, which is this blue line. So as the prices continue to stay over support, the 20-period moving average will continue to drift up, acting as support. So we really have to keep an eye on that as a risk management note, because if the market breaks out below that moving average, then the next role reversal support level is down here right around 320 for the diamonds. So what's my forecast for next week? I'm going to have to extend the price action here by condensing the price axis. And so next week, I think, because of the increase in volume today on Friday, I think we're going to go just a little bit higher, with the end of my line, again, being the target for the Dow at 339.77. So keep an eye on that. Now, if you take a look at the IWM, which is the Russell 2000 ETF, I'll zoom in here for you to show you that my forecast lines were basically right on target here, except it was leading the price action. And of course, that's not actually what happened. It's just what my forecast turned out to be. And I said that we would most likely move up on the Russell, but definitely pull back. And I talked about a head and shoulders pattern that's forming right now, which is something that investors around the world are going to be watching, because we have a perfect textbook head and shoulder pattern with the left shoulder right there, the head being the high from mid-March. And now that we have a pivot point to the downside, we have a right shoulder. Now, when drawing a head and shoulders pattern, what you do is you more or less draw a support level at the trough here. Each low here and here is connected. So I'm just going to put NL for neckline. And being that the Russell 2000 did not close over that 20-period moving average, that 20-period moving average is now going to act as resistance. So my forecast for IWM is going to be lower. Why? Again, because there's a failure to rally. So taking a look, I believe that we're going to go right back down here to test the low from early last week, and that is going to be my forecast. Notice how, even though the Russell was up slightly today, look down here as I magnify that for you. That's the stochastics oscillator, and that is going down. So when the K line, which is the blue line, crosses down below the red line, which is the D line, that will generate a sell signal for investors, and many will most likely close positions or exit any long ones for sure. So again, the downside price target for IWM is 214.74. Now, before I get to the S&P, I want to look at the VIX first. A lot of interesting things are happening here on the VIX. Notice we had a red candle today on the VIX. The VIX was down, and we were down for the week. But look how the CCI is moving up while the VIX is going down. That's a divergence from the CCI with a gap above the market. I'm going to erase these lines, because if you follow along last week, I said that the gap was filled at that horizontal line, but now we have a gap above the market. I'm going to still maintain my aggressive stance on the VIX. I'm going to move it up just like that, with a possible test of the highs from back here on March 25th. Reason for that is it's oversold on all levels, whether it be an oscillator, the divergence from the moving average, we have a gap above the market. It's oversold any which way you look at it technically. And in addition to that, one of the big headlines this week, in fact, it came out today, was that there was a VIX whale, as they've labeled this investor, betting on the VIX with an enormous amount of money coming into the VIX calls. And again, when you start to see headlines like this, calm before a storm and such, that doesn't exactly help the investor sentiment. In fact, when people are already nervous about an overextended market and you start to see tens of millions of dollars being invested in out of the money calls on the VIX, of course that's going to get everyone's attention. And in addition to this, we had the Bureau of Labor Statistics come out in a delayed release of the PPI, the Producer Price Index. And again, in this headline, you see some of the adjectives being used. It's a huge jump in the PPI, and that's not even an understatement there. If you take a look at this chart right here, you'll see that that spike in the PPI right here is matching the highs from what we see in 2010 and into 2011. And this is a dramatic increase, which turns out to be extremely inflationary. And with that, we could only imagine what the Fed is about to do, because they're really caught between a rock and a hard place here. And if we're not careful, we're going to see inflation like never before. So interest rates are going to play a factor in this long term. If interest rates start to go up, obviously that's bearish for the markets, and the VIX is absolutely going to act as a leading indicator for all of that action. Now, let's take a look at the spiders, because for the most part, the VIX is inversely related to the SPY. And between the spiders and the Qs, this is pretty amazing, because we have not seen this, at least in my career, where we've seen such a long stretch of green candles. Look at this. We have 3, 6, 9, 10, 11 straight days in a row, and the oscillators are starting to turn down with a gap below the market. So I'm going to maintain this. All I'm going to do is duplicate this, moving on over. My price target is maintaining just like that, except I'm going at 2 weeks. I'm going out on a 2-week price target on that, and I'm even going to extend this from the close, just like that. That's my 2-week forecast for the spiders. So keep an eye on the downside. Make sure that you're using protective stops to protect any long positions. If you're an option trader, you're probably excited about some of the put spreads you might be putting on, but that's the spiders. Now, take a look at the Qs. Similar position. Look at that. Straight green all the way with gaps all the way up. We have a gap here, a gap here, a gap here. 3 gaps below the market are going to act as a price magnet. So again, I'm just duplicating this and moving on over, and I'm going to keep my price target just like that. The only thing I'm going to do is extend that into the future. I'm going to just make that as straight as I possibly can for you. Just like that. That's my forecast for the Qs. Now, you think that's aggressive, but in reality, that would be an honest pullback or a correction, because the support levels down here around 305 is going to lead us right where we were not too long ago in the beginning of March. Now, if we take a look at a monthly chart on this, again, look at that. We have an amazing divergence from this moving average, and here we are coming into the second week of April. Can you see that volume right there? That's almost pitiful. That is one of the lowest volume bars we've had in many years, in fact 20 years. And if it keeps up like this, we're not even going to make it a quarter of the way up from the volume last month. And that is very bearish. So keep an eye on the Qs. Make sure you put your stops below some key support levels. Watch these market reports week after week. And I will be sure to put the links to the articles that I mentioned. I'll put that in the description box below. Please do everyone a favor. Like this video, share it. Help people manage the risk by looking at the charts, and everyone will be a lot better off for it. So have a great weekend, and we'll talk to you soon. So long.